PPP is a payroll protection program. It has to be paid back in 2 years, but it's only at 1% interest. So, you know, that's a pretty awesome opportunity for people. And you can go up to $10 million. That's huge. This podcast, it's at the bottom of this, by the way. It's phenomenal on answering all the basic questions. The CARES Act is if you cannot make your monthly mortgage payment. Like I mentioned, and I want to say this on a good note too, that not only is the CARES Act there if you cannot make your mortgage payment, so that they're trying to protect everybody and stop anybody going into foreclosure, but Fannie Mae, Freddie Mac, and FHFA have also joined together to be incredibly flexible on transactions that are out there that are still happening, so that they're making it incredibly flexible for appraisals. You might have to get an extra review on an appraisal because they're not going into the home. There might be a circumstance that they can't go into the home. And they're also doing verbal verification of employment. And obviously they're not reaching the office because people are working from home. So they are literally turning on a dime and being as flexible as they possibly can so that things don't fall through the cracks. So the biggest thing we're seeing fall through are in resort areas where, you know, everybody lost their job at Disney and Universal, in resort areas, and where buyers have lost their jobs. That's really the biggest area that we've seen a fall apart, because you got to remember that people move because of their circumstances. They don't move because we just told them there's this unbelievable opportunity. They usually move because they're getting married, they're getting divorced, they're adding children, they're downsizing, they're upsizing, they're making more money, they're making less money, they're relocating. It's always circumstances that do that. So they're trying to keep that machine moving as good as humanly possible. The $10,000, the EIDL loan, that is really, it's phenomenal. The payment is deferred for the first 11 months. So you don't have to pay a payment till the 12th month. The $10,000 advance that they're giving right away is completely forgivable. Biggest thing, the difference between the EIDL loan, which the EIDL loan is actually provided by the government, and you have to go through your lender for the PPP loan. And there are some banks that don't understand it enough so that they're not providing it. So it's a good opportunity for you to reach out and find out who is. If you're a local bank, that's where you want to go first because you have a relationship. But if you cannot go to your local bank because they're not doing it, or they're afraid of it, or they don't know how to go about it, then absolutely just reach out to the larger banks, or reach out to the people that you know in your marketplace so that you can find the right bank to go through. SBA has cleaned up their website, unbelievable, so that it's very easy, it's very user-friendly. If you applied before April 1st, especially for the $10,000, there was a lot of changes that happened over last week. Reapply. Even if you reapply and you add something to your loan, you're gonna still stay in the same place that you were in process for that loan. So that's a good thing, because I think everybody was afraid if they added anything else to it, or they went for the $10,000 advance up front, or they went into payroll relief, or whatever it is that they tried to change. They were really afraid that that means that they're gonna have to start all over again. And they are moving quicker than, for sure, than I've witnessed. So it's a great opportunity. And all of these links, which we're going to provide afterwards, give you a complete description of what it is, so you know what type of loan makes the most sense for you personally.
Right. And there's a...
Can I add one thing to that? Just because I'm not an expert in this area at all, except that I did go through this PPP process recently just to see. And one thing that to keep in mind is that sole proprietor, your net sort of income from that is considered part of the payroll. So if you're an agent and you have a S Corp, you have a sole proprietorship, whatnot, and you're like, I don't have any payroll, actually whatever you paid yourself is considered payroll up to the limit of the 100,000 annually. So it's something worth looking at. You know?
Here's one of the catches though that everybody wants to really pay attention to, and that is that, and because we know that a lot of salespeople don't file their tax returns on time.